Now, something interesting I saw out there today. Did you see a lot of these big dividend stocks today? I know Nordstrom was up. Gosh, Nordstrom was up big today as well, which is another huge dividend stock. But Cake was up like 4%. Foot Locker up like 6%. Whirlpool up 6% today. See something like this, something's going on here, okay? Cake has a 3% plus dividend yield. Foot Locker has a 6% plus dividend yield. Whirlpool has a 5% dividend yield, okay? Something's going on when you see stocks like that making a move. Here's what I believe is personally going on, okay, in regards to this, okay? So, if you haven't seen and you haven't been keeping up, Trueflation numbers have us going lower and lower and lower and lower. Okay, the next government numbers you're going to see, which is actually going to be pretty shortly here, likely within the next week, as far as CPI, you're likely going to see something with a 3, which is going to be extremely exciting because then we're only one number away from what the Fed wants to be at, which is in the 2s, okay? So that's what you're going to see, and then based upon Trueflation, there's a high probability you're going to start seeing actually 2s this summer. 2s, okay? So if that's the situation, then it's very likely Fed funds rate's going to start dropping in Q4. You may say, well, why would they start dropping that? At the end of the day, it makes no sense to have a Fed funds rate 5% plus if you have 2% inflation. It doesn't make sense, especially if you keep coming in month after month after month with something in 2 in front of it. It doesn't make sense. And so when we know the Fed is much more quick to act when they have something to worry about, right? So let's say there's some bad economic number that comes out in Q3, Q4, whatever. The Fed can easily at that point in time start dropping rates, right? Once they start doing that and it becomes convinced, basically what's going to happen is treasuries are going to start basically falling, okay? What you're going to be able to get on T-bills is going to start falling and falling and falling, okay? And people are starting to, I think, catch on to this, in my personal opinion. And so what they're going to start doing more and more is positioning ahead of 2024. Because in 2024, a ton of these treasuries, and actually at the back half of this year, a ton of these treasuries are going to basically come due, right? And so, basically they're going to expire, right? And folks are going to be able to take that money and buy more treasuries with it, or take it out and invest it somewhere else. And what I think is going to happen is as treasuries go down, dividend stocks get more interesting, right? Because they're yielding big numbers. And so right now, because treasuries have been yielding so high for basically about a year now, there's been really no appetite for dividend type stocks, because why would you buy, this is the way a lot of people view it, why would I buy a stock that has risk to get a 5% yield when I could buy a government treasury and get 5% yield? That's the thought process, right? So as soon as the market becomes convinced that rates are going to start dropping sooner rather than later, they're going to continue to position into a lot of these dividend stocks, which is going to make these dividend stocks run in likely the back half of this year and into 2024, as you get more and more folks that have all that treasury money saying, dang, what am I going to do? What if your treasury is only yielding 3% at that point, and you can get a stock that's yielding 5 or 6%? Plus, if at that time you got more confidence in the market, that's another game changer out there, okay? So that's something to keep in mind there. RVLV, Revolve Group, e-commerce play, clothing company, very successfully run over time, really exciting growth over the coming years. I bought 850 shares of this stock. I paid $16.58 for the stock. I bought over $14,000 worth of shares of Revolve here today. Revolve is, a stock I'm up on, and once again, I don't really like to buy stocks I'm up on, but it's one that's I'm not up that much on, and the stock price has come down immensely over time. And the thing with Revolve is I'm just getting this for a very undervalued valuation. Great balance sheet on this company, great management team with this company. Obviously, very future-looking business model. Like, if anything, they're the disruptor rather than the disrupted, right? And, paying about 19 times, roughly 2024 numbers, and that's if analysts are right about the 84 cents. So that might be low. I could see them doing between 90 cents and $1 next year. So when you look at it from that context, I'm not paying a very big price considering this is a double-digit revenue grower, right? This is a freak year that they got going on right now where they're not going to grow double-digit percentages. But I can tell you almost every single year they grow double-digit percentages, and I expect that in all future years after this year, essentially. So I believe I'm getting a pretty undervalued stock here for a great company and a great management team. And also, it's about a $1.2 billion market cap. Okay, not a big company at all. And the company, as of their latest report, had about $283 million of cash and short-term investments. So we're talking about 25%-ish, roughly, right? Somewhere around there, of their market cap is basically just in cash and short-term investments. So they got a great balance sheet. I'm paying about 19 times 24 earnings. for a company that I expect to grow revenue double-digit percentage, and I expect them to grow their EPS at a much faster clip than their revenue growth rate starting next year and beyond, I'll take that. I'll take that. And so I love Revolve, and yeah, happy. Okay, next one up here. What's the next stock I bought? Well, I think a lot of you guys I think definitely there's a lot of you guys that predicted this next stock. Okay, this is probably the stock you guys got the most right out of your predictions that I saw out there. Okay, no doubt about it. And that stock is PayPal, PYPL. Okay, about 388 shares here today. I paid $64.89 per share for those ones. A little over a $25,000 move. Okay, now with PayPal. Okay. Urgency this next 6 months. Okay, I am working with big urgency in regards to PayPal. Okay, as much urgency as I was working with in regards to Amazon, I'm trying to work with even more urgency in PayPal. PayPal is the best risk reward, to be quite frank, I've seen in the stock market since Meta for a bigger company. Best risk reward I've seen by a mile. I mean, we're talking about a company that's growing immensely, top line, growing bottom line at a way faster clip. And we're talking about a diversified business model between PayPal, Venmo, and Braintree. And so I absolutely love this one. This is easy money. This is easy money. And whenever the next CEO gets announced, which I'm sure they'll be able to get a top candidate in there, that's when I think the stock starts to move big, okay? And because then they'll know the future CEO, CFO, the vision, and it's going to be game over. So I'm trying to get my hands on everything I can under $100 a share. Give me every share in sight under $100 a share, and I'm buying. I think I'll buy this stock almost every single week for probably the rest of the year. I'll be completely honest. I think I'll buy PayPal stock every week for probably the rest of this year. Until this baby is over 100, I'm just going to be a buyer. And by the way, when it goes over 100, it's still going to be a steal deal. And, I did a very in-depth video 3 weeks ago on PayPal. So if you want to dive down the PayPal rabbit hole, I made a 27-minute video that dove way into PayPal in regards to that. Okay, how do I feel about earnings for the remainder of this year? Okay, I feel extremely confident in certain companies and not so confident in other companies. For instance, there's specific companies, Amazon, Meta, NVIDIA, that I'm extremely confident we're going to see their earnings per share skyrocket this year. That are very big, impactful companies for the market. There's other companies out there that I'm not so sure about, as in Apple, right? Not so sure about Apple. And so it's really case-by-case basis. Oil and gas stocks, I think their earnings can be respectable, but are they going to be as good as they were, in the second half of last year? I highly doubt that. So you're going to have a lot of moving parts here. Housing is booming right now still in terms of the home builders, at least, right? Not in terms of existing home sales, but in terms of the home builders. They're putting up record numbers right now and probably going to continue for the back half of this year. So it's a mixed bag out there, folks, okay? Stay focused, stay disciplined out there, build out your portfolios. GVD, remember GVD, growth, value, dividends.